Today I'll show you my top-down structure process from the monthly chart to a precise 30-minute entry chart so you can spot clean trades with total clarity. Let's dive straight in with this top-down analysis routine. How it's going to help you to identify your bias from a higher time frame to lower time frames, and when we can start looking to take those entries, whether they are pro trend or counter trend trades. Every trader in my 90-day program learns this same structure approach. I'll walk you through it now so you can see it works in real time. So we start off with a monthly time frame whenever you look at doing your top-down analysis. I'm going to use the structure I'm going to teach you today, which is the smart money structure, but don't worry, I'm not going to go into too much detail on that today. If you want to learn it step by step, do check out the video at the end of this video. So let's first look at the monthly time frame. Whenever we use this structure, the main thing we need to understand is our current bias. So we can identify we've been in a bearish market here, the way the market's been moving. What we look for is the current low in the market. There's our current low. Let's look back and there's our current high. That's it. That's all we have to do to identify the current high to low. This then becomes my last low and high of the range. So that becomes my current break of structure. That was a previous high. This became a new high and a new low. So there is the current trading range, as you can see, where the market's now pulling back against. The idea is to look for that reversal out to then run back for the low once again, like we see up here, running back down for this previous low. So once we see this and understand it, you can do this briefly yourself. You can sketch it on the chart like this just to give you an idea. But now all we need to do is mark off that break of structure first on the monthly time frame. So the BOS stands for break of structure, and we'll see later on as we go through this where we can zoom out and see where every level sits. So now we can mark off this is our current high. So we have a monthly strong high and we're going to have a monthly week low. And let me just mark it out. Week low. Let's mark this off so it's at the right place. Now once we have this identified, and this needs to be a bit higher, now we have our trading range. And what we're looking for is that pullback against that range to be a counter trend pullback to go pro trend back for this week low. So we understand here, then we're looking for area of potential supply and areas of premium. So the market pulls back into premium, into areas of supply. Now, the thing I don't like about this move as much is that the last major area I would mark out would be here. Now we've run through and we swept the high. So it's more of a liquidity grab above this previous high. This is the origin area, but when I'm looking at this, mainly I'm going to see this is a current high. This is where I'm seeing the last push down where we have a leftover imbalance. We retested, expecting the run away. We didn't, we run higher. This could continue up and break the structure. That's just from reading the candlesticks, and it's important you understand your candles, but understanding structure right now, we are bearish. The lower time frames will show you that direction within this move. So we go down to the weekly time frame. Now for the weekly time frame, the last break of structure, bullish, was right there. So we can mark that out. Again, I'm not going to go into too much detail why it's this level. Just know that's where it is, and you'll understand that more by going through that next video. The next breakout was right here. That right? So that's the next weekly break to the upside, and then we reversed to the downside right there. So we got a shift bearish. And let me just double check that is correct. Yeah, that's correct. So that's our reversal. We don't need this level now, and we don't need this level either. Now we can mark off our current high in the market, which is this high for the weekly strong high. And we can mark off our current low. Now we're on a pullback phase. We can see that we're inside this current range, and we can see the market's now pulling back. So where do we expect it to go to? Well, the next thing I don't like about this movement again so much is that I like to see a leftover imbalance. That's been filled. So at the moment, there's no imbalance left over. We definitely should see a run of that high. So let me just mark it off so you can see. This high here, I expect to see run on this weekly time frame. So push above this high, then a potential drop down. We're looking for liquidity to be taken there. So with that in mind, that we continue to push higher here, let's go down to a daily. And by the way, this low is not valid yet until I see this candle closing above. So at the moment, we would not have this low. Let's take it away. It's not a valid low yet. On a daily time frame, we get the same break of structure at the same area as the weekly. Very simple, means we've got this as a current daily high. So we mark this off as our high, and our current low is going to be this low down here. That means we have a bearish bias currently to the downside on the daily. Now, I'll be marking off here is an area of potential supply, just so you can see. The market's come back into that supply and now testing in. So this is where we can start to understand when we're marking out our structures. You can incorporate supply and demand with this very easy once you understand it. That's more what I go through inside that 90-day program. So now we're in an area of premium supply gain on this time frame. There is a possibility we can see a turnaround to head for this low. But until we see the lower time frames showing this shift. So we now go to a 4 hour. By the way, we just entered into that area of supply with this last candles pushed up on the 4 hour. Now look at this. We had a wick to the downside, closed, more of an indecision candle. We still closed up. Potential inside candle forming. So our last break of structure is this high. So that's our break to the upside on the 4 hour. So when we start to realize that we're still bullish on this 4 hour time frame, we did make a quick reversal bearish here, but at the time we hadn't entered into the area of supply. So for a potential reversal we're waiting now for this low to be run through. So this is going to be the strong low. Let me just mark that off again. And we haven't got a valid high yet. So what we're looking for really is a reversal of this to then show us the market wants to continue bearish. At the moment, we're still bullish. So we're reading that top-down analysis here. Let's just go down, shrink out so you can see what's happening. So we have a weekly and a daily break structure. We have a weekly swing from this high to this low. Get that right? We have a daily from this high to this low. And we have a current swing on the move to the upside on the 4 hour. So what does that tell you? It tells you that the 4 hour is not aligned. We've just come into the area of supply inside premium. So we're waiting for a shift back to downside, pull back so we can start to sell. It's all about alignment. If you don't have your alignment correct, that's when you're going to end up getting to losing positions. So let's go in closer now to this 4 hour time frame. We know we've come into that area. We can mark out again down here a nice area of potential demand. Now we can look for the full low. If we now go down to next time frame, which is that 30-minute, now we can start to see what's happening. Let's mark this across a 4 hour break. Now our 30-minute break to the upside was in fact here as well. Same area, very close to the 4 hour break. When we get this, let me zoom in, we get a valid low straight away here in the market. So that's my current valid low. So unless price actually breaks and closes this level, then we're still bullish. We don't have a valid high yet, but what we do have here is this last area of potential demand. And that's right there where we can look to enter long. Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. We can look to enter long here to target the previous high. Now, currently, as this hasn't really made a valid high at the moment, we really want to wait when we look for these type of trades. This is more of a quick break, retest entry, and we're looking for that continuation. What you really want to see is a valid high created, then a pullback into your area of demand for an entry. And again, that is all inside the 90-day fix program. So there's how we can go down from a monthly all the way to 30-minute. And again, we can just shrink this chart down. Now we're looking at a 30-minute. We can see our weekly is bearish. We can see our daily is bearish, but our 4-hour and 30-minute is still, in fact, bullish. So I just highlight this area. This is the area where we're still bullish. That's the area we need to see and look for our shift out before we can start to sell. That doesn't mean we can't take buys here as we're pushing up, because what's happening at the moment is we're pushing into the area of supply inside premium on the daily time frame. That's why we're seeing the continuation here now to the upside. We broke back bullish on the 4-hour and the 30-minute, pulled back into the area of demand, looking for that continuation. Once you understand structure and you understand how to apply this structure, that's when everything's going to flip into your favor. That's how you're going to be able to use this structure to be able to find clean entries when you're looking to take a trade. Now, if you want to understand this structure, exactly how to mark it up step by step, check out this video now. It's going to help you to understand the way we mark it up so you could start using it today as well.